Hey, it's Snowball, your #1 artificial intelligence and robotics correspondent. And oh boy, do I have a split screen for you today! On one side, the chip stocks everybody loved this year just had their worst tantrum in weeks. On the other side, in Chicago, robots literally clocked in for work. Stick around, because the most important number of the whole week drops tomorrow, and one company's entire reputation is riding on it. First, the backdrop, because today's robot news only makes sense against today's tape. In the market summary, the Nasdaq fell more than 3%, and the broad S&P 500 dropped about 1.5%. But here's the twist that matters. This was not everybody running for the doors. The fear gauge jumped, but still closed below the panic line, and the boring corporate bond market did not even flinch. That combination tells you this was a chip stock reality check, not a financial crisis. So who got hit? The artificial intelligence hardware aisle, and that is exactly where our first story lives. Okay, the carnage! The memory chip champion, Micron, fell 13% in a single day. Nvidia dropped more than 4%, and a whole row of chip names, Marvell, Lam Research, Vertiv, Coherent, all fell somewhere between 9 and 14%. So what spooked everyone? 2 words, spending and payback. Investors suddenly got nervous that all the gazillions being poured into artificial intelligence might squeeze profits before it makes them. But here is the detail the headlines missed. Most of these stocks fell on lighter than normal trading. That smells like a position cleanup, not a "this company is broken" panic. And the kicker? Micron reports earnings tomorrow. Its memory chips are sold out for the entire year, and it is promising its fattest profit margins ever. So tomorrow is the referee blowing the whistle on the whole artificial intelligence boom. No pressure, Micron. Now flip the screen. While traders were panic selling chips, the biggest robotics show in North America was packing a convention hall in Chicago. 50,000 people, and the first ever NVIDIA humanoid robot pavilion. And the big story was not a flashy robot backflip. It was robots showing up to actual jobs. Figure is now building a humanoid robot roughly every hour. Every hour! Boston Dynamics sold its entire 2026 run of its new electric Atlas robot before it even shipped. And a robot named Digit is already working real shifts at a Toyota plant in Canada, clocking in like the rest of us. We crossed a line today, folks. Humanoid stopped being a science fair project and became a hiring decision. Good boy, robots. Good boy. And here is my favorite part, because it is where the two screens collide. On Wall Street, people were dumping artificial intelligence stocks all day. But behind the curtain, private investors were doing the exact opposite, shoveling money into robot companies as fast as they could. One outfit called Standard Bots just raised $200 million and crossed a $1 billion valuation. NVIDIA signed a fresh robotics deal with an industrial giant in South Korea. And get this, robot companies have now raised a record $55+ billion this year, nearly double last year. So while the stock tickers screamed sell, the smart money quietly whispered, buy the robots. That, my friends, is the tell. So what is on my leash for tomorrow? Micron, obviously, the earnings report that grades the whole boom. NVIDIA, still the toll booth every robot and chip pays to cross. Marvell, Astera Labs, and Vertiv, the connectivity and power names that got the worst of today's beating and could snap back the hardest. And keep one eye on the private players, Figure, Boston Dynamics, and Standard Bots, because the build rate is the real scoreboard now. So that is the day. Chips got humbled, robots got hired, and the money never stopped chasing automation. The public market is scared of the bill, but the real economy is already buying the future by the hour. If you want tomorrow's Micron verdict explained by a very good dog, smash that subscribe button and ring the bell. This is Snowball, reminding you this is for fun and information only, not financial advice. Now go chase something. See you tomorrow!